Welcome to this week's Money Metals podcast, helping gold and silver investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the company voted 2015's Precious Metals Dealer of the Year in the U.S., Money Metals Exchange.
This is Mike Gleason with Money Metals Exchange, and it is my privilege now to be joined by Steve St. Angelo of the SRSRocco Report. Steve is an independent researcher and investor who follows the precious metals and energy markets like few others and has one of the very best content-based websites in our industry, and it's great to have him on. Steve, welcome back. It's good to talk to you again.
Yeah, Mike, it looks like events are heating up in the market, so it's great to chat about some of these things that are taking place.
Certainly. Well, we do have lots to cover, so I'll dive right in. Now, first off, I wanted to ask you about the recent announcement by the state of Texas that they're going to build their own depository and store the state-owned precious metals themselves versus leaving it in the hands of the New York Fed. So what did you make of that, and what does it say about the trustworthiness of these major financial institutions?
Well, it actually says a lot. Kyle Bass, who made a fortune betting against the subprime market, he was very early, and I found out about actually the story behind him. He's the one that actually convinced Texas to the school system to have their gold and purchase gold. And so, but it's been up in the New York, it was at the New York Fed, but it has been moved to a private vault in New York. But they are going to build. And what was interesting, Mike, was not only did Governor Abbott of Texas announce they're going to build a new depository, he made sure in his press release he said a gold and silver depository. So that's important because silver is mentioned there, and just not as an industrial metal, but it's in the same vein as a monetary metal. So Texas has always been a little bit different, but I think different in a good way because they believe in rights. Not only do they want their gold, they want their gold back on their own ground, and they also stated that they're going to put some kind of bill where it cannot be confiscated from the federal government. Now, this is interesting because Utah passed gold and silver as legal tender. I believe it was in 2013 or beginning of 2012, 2013. Arizona did that last year. They also passed a bill that makes gold and silver legal tender. So if you wanted to pay your taxes to Utah or Arizona, you could do it in gold and silver. And if you could find people to trade with goods and services and they would take gold and silver, you are legal to do that in those states. So we're seeing the states now take control in getting back to a more sound money. And I think what Texas is doing, you may see this increase in other states.
Switching gears a little bit, India has certainly been making news for the amount of silver it's been importing of late. Now, the Indians have certainly been known for their affinity of gold for centuries, but their appetite for silver seems to have really expanded. Talk about that. Why do you think that's happening?
Well, India is on track to import 9,000 metric tons. They've already imported 3,000 in the first 4 months of the year. So this is actually up from 7,000 last year. Now, the United States has been one of the largest importers of silver in the world, and the reason why is we have a lot of industrial applications. So we imported about 5,000, and certain years it's 6,000, especially during like 2011. It was 6,000 because there was a lot of investment demand. Well, India tends to be more of a roller coaster ride. When they import a lot of silver bullion, and they imported a record 108 million ounces of silver bar in 2008 during the crisis. Well, they had a very high imports back then. But in 2012, when silver actually plummeted, well, imports fell as well. So they see silver as a steal at this price. And some say, well, because the gold taxes are high. But they were purchasing a lot of silver bullion back in 2008 when there wasn't any gold taxes. So when you look at the top three, which are India, 9,000 metric tons. The United States has actually increased its silver imports, and I think I've mentioned in several interviews and articles that we really don't have the extra demand for silver. So somebody is acquiring this extra silver that's coming into the country. So we're on track to import 6, and China is going to import 3,000 on track to. So that's 18,000 metric tons. There's only 27,000 metric tons of mine supply. Well, China is holding on to all their silver that they mine. So really, if you minus them out, there's only 5,000 metric tons, Mike, for the rest of the world. So India is putting severe stress on this on the wholesale demand for silver, and I think if we see fireworks coming towards the third, fourth quarter of this year, we could actually see their imports increase, which would cause even more stress.
Meanwhile, here in North America, we continue to see sustained demand for government-minted coins. June sales for both the Eagles and the Maples have been way up, as you just reported on your site this week. And the Royal Canadian Mint had record sales on silver maples in the first quarter. So I guess that means J.P. Morgan is buying maples now instead of Eagles. I say that in jest, of course. But talk about this and also comment on the rumors that J.P. Morgan is behind all the silver Eagle buying, because I know you have a thing or two to say about that.
Sales right now of silver Eagles, if we have another strong week, they'll be about 21 million. So we're only $1 million off of last year's half-year sales, which is very good, even because things have been kind of a little bit light in the first 3-4 months. So we picked up again, and I think people sense there's something going on in the market. So we're seeing a big increase in demand for gold Eagles as well as silver Eagles in June. But I've mentioned in a few articles that, yes, silver imports in the United States have increased significantly. It's like 35% compared to last year. But the market demand really doesn't dictate that. So somebody is acquiring it. And it could be, J.P. Morgan could be one of the big buyers. But I've talked to many people in the industry, and they know a lot of the authorized dealers who actually purchased the silver Eagles from the U.S. Mint. None of them have heard anything that J.P. Morgan is buying silver Eagles or silver maples. So it moved them to purchase silver Eagles. It makes much more sense for them to purchase silver bullion bars. So I think it might be hedge buying silver Eagles. They could be. But I think most of it are large buyers and individuals who are ramping up on because they sense something is going to happen at the end of this year. That's why I think silver sales are still very strong in the retail market.
You make a compelling case for higher energy prices and higher metals prices over the long run. Now, there is a real frustration in both the metals camp and the peak oil camp that markets just aren't reflecting reality. We know markets aren't always rational, but we also know that they can't remain irrational forever. Are you seeing clues to indicate reality is about to reassert itself?
Excellent question. As you know, I started investing in the precious metals in 2002. It wasn't until 2007-8 I realized that no one was talking about energy. And, you know, you cannot mine gold or silver without energy. And so now the top gold producers, they're mining gold at 1.2 grams per ton. So it takes a lot of energy to process just 1 ounce of gold. So I started looking at how energy was going to impact the precious metals, the mining, and the overall economy. And I found out that, you know, peak oil is here. Well, we haven't seen peak yet, but we have been in a plateau for conventional, inexpensive oil production since 2005, 10 years. The only thing that has increased is unconventional and other liquids that really don't count as oil. Matter of fact, natural gas plant liquids have been increasing significantly since 2005. But when oil was at $100 a barrel, you could only get $40 for natural gas plant liquids. But that is counted as liquids in the overall number. Anyhow, to me, I see the severe stress on the system when we start to see a peak in decline of cheap oil as well as unconventional. And the market is being propped up by a lot of leverage and a lot of paper. And, Mike, that's only possible if you have a stable or growing energy supply. Well, because we've had a stable, cheap energy supply for the last 10 years, that's the reason why we have seen all this additional leverage put on the market to give the illusion of growth, where the GDP growth has actually been inflation. So when we start to see the downside of this peak oil, it will put a lot more stress on the system, and it's doing it already. That's why we're seeing all this volatility in the markets. The system could go at any time, but each 6 months, each year, the situation will get even more dire in the energy situation, and it will pull the plug on the Fed and central banks propping up the markets, and that's when we'll see a mad rush into physical assets such as gold and silver.
People are starting to talk about another financial crisis. Stock prices are at sky high based on PE valuation, and there's more debt and leverage in the financial sector than ever. I want to hear your thoughts on what might happen to metals prices if we get a scare on Wall Street. Now, back in 2008, we saw a massive liquidation of all assets, and metals weren't immune, although they did bounce back much quicker than the mainstream financial assets. But this time around, we're looking at metals and commodity prices at much lower levels than they were leading up to the last financial collapse. So how do you see things playing out here for gold and silver in such a scenario?
It seemed when QE started, when they started propping up the markets in 2009 and then onwards, precious metals and commodities tend to, and the stock market, the broader stock markets, all went up in unison. Well, when QE3 came out, I think the Fed and central banks, especially the Fed, figured out a different way, a different approach. Unfortunately, the precious metal community, as well as I, thought that when QE3 came out at the end of 2013, actually 2012, we would see continued higher prices in gold and silver. We got the exact opposite. So what happened was money went into the bonds, liquidity went into the stocks, and actually the precious metals and the commodities were sold off. So what we have now, we have a total disconnect. We have a huge hyperinflated stock market that is forming a top. And then we have a very oversold, bottoming precious metal market. So people to say, well, if the stock market does crash in September or October, we would see a crash in the precious metals. I don't think that will occur. I think we will see quite the opposite, because the precious metals have bottomed out already. I'm not saying they couldn't go any lower. So I actually think, and we're starting to see it now, as people are sensing financial turmoil in the bond markets, as well as the event in Europe and Greece, I think we will see the exact opposite. I think the prices of the stock market will fall, but we will see precious metals actually, they could jump significantly higher.
It'd be interesting to see, if they do serve as the safe haven in that scenario. I agree with you. I do think that is a very, very real possibility. Now, touching on Greece, European officials and the Greek government have elevated can kicking into an art form, it seems. Greece is bankrupt. The government has more obligations than they can possibly meet. The negotiation with creditors are yet another example of irrational behavior that cannot continue forever. Any chance of officials admitting a default this year?
Yes, anything is possible, and we're seeing it even on Zero Hedge today. It looks like there was no agreement, and it's because of the pension plans. The Greek people, they put into power these new officials because they did not want to go down the same path that they had been on for the last 5-6 years. They wanted to get out from underneath, just like the folks in Ireland did. Basically, they gave a middle finger to the bankers, and so I think the Greek people want that. Unfortunately, I think there's been a lot of pressure on these officials from the United States and the European Union that they can't fold. However, Russia offers the Greece people, as well as the nation, a much better deal, especially putting their pipeline through there, helping them out with billions of dollars in aid. I think the problem is once Greece goes to Russia, if they take that option, then why can't Italy do that? Or why wouldn't Spain or Portugal? And so also, if they do get another bailout, and then Italy may say the same thing, well, if you're bailing out Greece, why don't you help us out? So it's a very tough situation, and I think even though they may kick the can down a little further with some sort of settlement that's just lasts for maybe a few more months, the situation will be a Greek exit. It's for the best interest of that country. And I actually think we're going to see more of the European countries move towards having relationships with Russia because they want to do trade. It's in the best interest for the European countries to do trade with Russia. So we may see a Greek exit this year, but if not, I would imagine it will come. It just may take a little bit more time.
I know you prefer to take a longer-term and more fundamentals-based approach with the metals when giving your outlook or forecast, but what are you looking at as we sit here in mid-year 2015? Are we nearing the end of the consolidative phase in the metals? What are your thoughts there? And in your very studied view, what are the reasons behind your long-term outlook?
Mike, that's a good question, and I think the precious metal analysts on the whole have, I think we've done a little bit of a disservice trying to guess where the prices are going to be, like in 2013, at the end in 2014, and we've done a disservice to people who are trying to figure this all out, either the experienced investors, precious metal investors, or even new ones. And so it's hard to put a number on how things are going to unfold, when they're going to unfold. But I will tell you this. As time goes on, the leverage against the precious metals just increases. It's kind of like pulling a balloon, a big balloon under the water. The further you go down, the more the price gets pushed further down, and stocks tend to just keep elevating higher. I think the Nikkei hit a new record. It's insanity. The markets are completely insane. And just to give you an example, we didn't chat about this, but I put an article out. The top banks in the world paid fines and settlements since 2009 of $128 billion. Now, Blank of America, and I call them blank because there's nothing there, they paid $61 billion in fines. Then we had J.P. Morgan, and that's the morgue where all this seems to be all their dead bankers have been going to. They paid $31 billion in fines. And then Citicorp, I call them Citicorps because there's nothing but corpse there, they paid $10 billion. So out of all the banks in the world, the U.S. are on top with fines. And if you add up all that money, just the fines that the banks paid in the last 5 years, they could have paid for all global silver production since 2007. In just the fines. So it tells you just how messed up this system is. Now, I don't see the prices of silver falling too much from here because I'm looking at the primary silver miners, and they have cut as much as they can, and right now their estimated break-even is 17. Could we go a little bit lower? Sure. But if we do, India is just going to buy more silver. They're going to import more silver. So I think we're bottoming here. And I do believe, even though we saw a huge increase in the price of silver in 2010 to 2011, it went from 17 in September 2010 to 49 in April 2011, 6 months. I think this time around, Mike, it won't take 6 months. I think we could see that kind of move in weeks, because the leverage now in the system is so tight, it's so extreme. So when you have extreme leverage, you have extreme moves in either direction. So I think, and I'll conclude here, even though precious metal investors have become a little complacent now with that the prices continue to be lower, I think if you don't have a good holding of precious metals, it'll happen so quickly, it'll be hard to acquire the physical metal.
We definitely have seen situations in the past where things get very interesting when it comes to supply and production bottlenecks and all that. And if we do see some sort of black swan event, I'm sure it's going to get crazy, and it is going to be hard to obtain metal at that point without any significant lead time. It will be quite interesting for sure. Well, before we let you go, Steve, tell our listeners how they can learn more about the SRSRocco Report and what they'll find there on your site, and then also about the new silver report you've been working on.
Yeah, thanks, Mike. If any of your listeners, readers, want to check out my site, it is the SRSRocco Report. They can Google it or just go SRSRoccoReport.com. And I put out 2 or 3 articles a week, and I try to look at the precious metal industry, supply and demand, the mining industry, as well as certain factors of the overall economy and energy, and how they all kind of intertwine. And I just I'm finishing up my first report, its first paid report, very modestly priced report called the Silver Chart Report. It has 48 charts just on silver of some of my work over the past 6 years, all updated, including many new ones no one has ever seen before. And I have one chart that I would almost guarantee, Mike, 99.9% of the people in the precious metal community has never seen this chart before. And if you look at it, it's a silver oil price chart from 1900 to 2014. And when you look at that chart, it'll take all doubt out of your mind as to why the price of silver has reacted and traded a certain way over the past 100 years. However, even though the price of silver corresponds to the price of energy, that will change in the future when we see a collapse of net present value and paper assets. The price of oil really won't dictate what the price of silver or gold are doing anymore. It will be the massive rush of people out of paper, increasingly worthless paper assets, and into physical assets. So that's when we'll see this transfer of wealth from a commodity stance of silver to a high-quality store of value of silver. And I see that happening within the next several years.
Well, that's, exciting. I can't wait to see that myself, and I certainly love your site. Always get great information there that I'm using all the time in conversations and research that I do. I hit your site first, and appreciate you coming on with us. It's great chatting with you as always, and look forward to catching up with you again real soon. Have a good weekend.
And you too, Mike. It's been a pleasure.
Well, that will do it for this week. Thanks again to Steve St. Angelo of the SRSRoccoReport.com, one of the best metals market-related sites in the entire industry. And check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.